I wanted to cover GBAD quickly so you can see what I see. So 4 hours. 4 hours we were in this downtrend. You might argue that we hit a demand level. We did. But overall, I was pretty bearish with this. We had this uptrend right here. I don't really mark the uptrend accurately because I don't really care. It's more about market structure. We have breakout structure here, retracement to a supply area. After the supply area, we started going down. Going down 1 hour, you can clearly see breakout structure here. Now, yes, we hit a demand, but overall market structure is still bearish, at least for now. What happens here is that we have this 4 hours higher time frame order block here, and the refinement on the 1 hour, which is this one. Now, of course, I would have preferred to wait for the refinement. The refinement is not always hit. Sorry again for my cat. The refinement is not always hit. But of course it will be. All right. I was saying you can just operate with limit orders, but I will do that on the refined area, not on the big 4 hours area, at least me for my trading style. Now, what is happening here? Why did I take this entry if we didn't reach the refinement? I did because I went on lower time frames. Of course, it is a riskier entry because we didn't hit the refinement, but we were already inside the overall 4 hours order block, so we might still get some downside. I went on the 5 minutes and I was trading here. What I traded was this breakout structure. After hitting the major, I didn't enter here, we hit, and then I saw this breakout structure, the 3 to 5 minutes here, break to the downside, supply area here, the supply that created this breakout structure, retracement, didn't catch the entry here. We had one candle to the downside, and this candle to the downside I entered. I would have preferred to actually enter here, but I wasn't able to. I was still waiting. So I entered there. And we went to the downside, already closed partial profits, and we have stop loss at entry. Now, another thing that happened is that I added one position in my account right here. So what happened here is that we are still bearish in 1 minute. Even though this is, let me show you. This is clearly a 15 minutes demand area, which could be respected, and we might continue pushing up until the refinement, and then we look for more sells. Now, why did I enter some more sells on the 1 minute? I saw breakout structure to the downside right here, breakout structure to the downside, still bearish. Retracement, I considered this high as liquidity. And right above liquidity, I want to trade from the supply created, which was this one. And this refinement of supply created here, which also created this breakout structure to the downside with this candle, was my entry. Not perfectly, not perfect right there, but here. A stop loss just above the supply and take profit lower. Now, I was in profit, I'm still in profit. If we come back to entry, I have my stop loss at entry already because we were already more than 1-to-1 restored ratio. If you do the analysis on if you do the analysis one day and then you look at a pair a few days later, do you cancel the objects to start from fresh or do I leave them? It depends what happened in the price. If the analysis that I made is still valid and we're still we're still in the same pace, maybe we're ranging, we didn't move much, then I don't change anything. If the analysis was invalidated or something changed, then I need to do it from scratch again. Is an order block a supply zone? And why do you consider that specific high as liquidity? So an order block, yes, I consider my order block supply zones. I use the same name for both. I know that some people say that there is a difference. I just use order blocks and supply and demand as the same. I mean, I just use supply and demand for order blocks too. Wait, so why did I consider this high as liquidity? Two reasons. One is a matter of perspective. Someone that is bullish might consider this a break of structure. Someone that is bearish might consider this as a grab of liquidity, so this as liquidity. Now, why did I decide to consider it as liquidity? Because I was bearish overall, and also because many times, and if you spend a lot of time on charts, you will notice this, is that price is not always perfect. It's not like we will always just continue like this from every supply zone. It's not, that's not happening. I mean, it happens sometimes, but it doesn't happen many times because it's just too perfect, and of course everyone will make money this way. So what happens is that the price goes a little bit above the previous high, grabbing liquidity of that high, because every trader has stop loss above highs, as you know, above double tops, double bottoms, highs, lows, and there's just a supply above this high, just a few pips above it, just to grab liquidity. And then we don't even close with a full candle above this high, so it was just a grab of liquidity, and we'll continue to downside. Let's see. Your supply and demand strategy, do you use any specific rules for candlestick patterns? No, not really. Candlesticks are not that important to me. You can use them if you backtest it and you find more accuracy when maybe you wait for a pin bar or you wait for an engulfing candle after a supply and demand level. I don't. I look at the different confirmation. It is explained in the course. And soon also the refined course is coming. The 2.0 course is coming, and it's free for all of you. So I just didn't want you to, just didn't want to make you pay again, you know. How do we trade counter trends? The reason why I'm thinking about how to answer to this is because, first of all, trend is subjective because there are people who trade with the 4 hours trend, people who trade with the 15 minutes trend. It depends on your strategy. For me, I prefer to follow the 4 hours and 1 hour trend. Now, with this, by saying this thing, first of all, so by understanding which time frame I take as example for finding my trend. If I want to go against that trend, so if I want to go against 4 hours and 1 hour trend, there we go. I just need to look for lower time frames confirmation. So first of all, I would use half risk than usual because we are against the trend. So I already put less risk on my trades, first of all. Then let's say, see, the reason why I'm telling you, like the 4 hours trend here on GBAD is bearish. Now, if you zoom in on the 4 hours, on the 1 hour, sorry, it's bullish, higher highs, higher lows. So am I going together with the trend or am I going against the trend? The market is fractal. You need to watch the videos from the course. This is the same person that asked me about the Fibonacci levels. You need to watch the videos from the course. We need to build a strategy. Hello, Edward. I just want to know if you're planning on entering an intraday setup. Would you prefer to stick to the 1 hour or the block refined in the 15 minutes charts and you drop down to the 1 minute after, or look into the 5 minutes confirmation? So for intraday setups, I use both 4 hours and 1 hour, and then I refine it on 15 minutes and 5 minutes. And for the entries, my entries are from the 5 minutes to the 1 minute, sometimes 30 seconds, but not really necessary. 5 minutes to 1 minute, mostly. What strategy do you use for indexes? Same as all others. You just need to get used to trading indices and how they move. Does the liquidity get taken on trend lines too? Like it gets taken on support and resistance? Of course, yes. Not always, I mean, usually, but there is no always in trading. So Edward, I noticed a lot of your trades we exit sooner, we take partial profits sooner, and we put stop-loss and entry. And then if it comes back to entry, they are closed automatically. If they continue, we hold them.